Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is Wednesday the 7th, and we had the market trading a little bit lower here today. Corn for July trading down 3.5 cents, soybeans down 13 3/4, and wheat in Chicago down a half penny here. We did have ethanol report come out, but other than that, what drove the trade today?
Cody, we did have that EIA ethanol number out early. Ethanol production last week was down 4,000 barrels per day, so not a huge story there for the corn market. Really seems like this market right now is starting to trade based on expectations for Friday's USDA report. Specifically, when looking at new crop prices, take a look here at this chart. This details current marketing year expectations in the first column, and on the right column here, we have expectations for new crop carryout. As you can see here, expectations for corn and soybeans. Carryout's expected to be quite a bit larger in the new crop than what we saw here in 2013-14. Wheat is the one outlier here where carryout is expected to decline in the new marketing year. In large part, that's due to the very short crop expected in the U.S. here domestically. But let's look at corn and soybeans here for a moment. As I said, analysts are expecting 1.6 billion bushels here, 2014-15 carryout, but we have not seen significant weakness on the December contract. Cody, what do you think kind of explains that?
Well, I think if you compare it actually this May WASDE report to last May WASDE report and the projections that we saw in last May WASDE report, I mean, we were looking at ending stocks of around 2 billion bushels. And so when you look at analyst expectations for Friday's report coming in somewhere around 1.6 billion bushels, that's significantly lower. And I think that I think it has the trade here looking at this thing and saying, that's not overly bullish, it's not overly bearish either. One of the reasons perhaps why this corn market continues to maintain that bullish trend and hasn't broken yet. Not only that, but you have some of those planting delay concerns, you have some export strength, and you have the wheat market, which is just on fire right now. I think that's all kind of playing together to keep this corn chart intact. When you look at soybeans, it's very different.
Yeah, absolutely, Cody. As you said here, looking at soybeans, expectations are for, based on the current marketing year, new crop ending stocks more than doubling going into next year. I believe last May we had around 265 million bushels expected for carryout. Obviously, the drought of last summer significantly cut those carryout expectations, but when you look at this year's projected carryout for the new crop, that's sizable compared to even what we were coming into last year. We've seen a major acreage shift here between corn and soybeans. 81.5 million acres expected planted for beans here. So for that reason, I think we're seeing a little bit of relative weakness out of soybeans. Take a look here at this daily chart of the November contract. Earlier in the week here, we really broke this chart technically, as you can see here, made a run to get back above it, but it acted as resistance 3 trade days ago. And for that reason, I think technically this bean market's looking a little bit weak. You combine that with the fact that a very large acreage number is expected. As a result, very large carryout. If I was a bean producer right now, I'd be taking a serious look at pricing some new crop production here. Obviously, a weather premium could still get put into this market, but based on what we're seeing right now, I think it's a good time to take a look at making a few forward sales.
Yeah, absolutely. And also, keep in mind that tomorrow we will have export sales numbers out. Wheat expectations for old crop between 100 and 300,000 metric tons. For corn, between 500 and 800,000 metric tons, and beans are looking at between cancellations of 100,000 metric tons to possible new sales of 100,000 metric tons. Obviously, in the last few weeks, beans export sales really has not been a great performer, so I'm not expecting anything great out there. But guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, you can take a demo of the mobile trading platform actually at grainhedge.com. There's a ticket in the top left-hand corner. Go ahead and fill it out, and you can see what it's like to trade futures while you're on the tractor or on the go in the field. So thanks a lot for tuning in. We'll see you here tomorrow.